Welcome to the Profit Answer Man, Richard Bond. It's great to have you join us today.
Thank you for inviting me.
You are most welcome. Can you share a little bit about yourself and your business?
I'd be happy to, Rocky. I'm pleased to be here because I think you and I are kindred spirits. So we both work for big companies. I worked for Seagram's for 11 years. I got tired of the liquor business. I left. I ran a temporary help business. It was owned by my family for 2 years. I more than doubled it in sales and profits. But my father, brother, and I were an unholy combination. If I said today was Thursday, they said yesterday was Wednesday or tomorrow's Friday. I left, they sold the business, and I've been a recruiter now for over 30 years. For the first 20 or so years, I worked mostly with major entities like PricewaterhouseCoopers, GE, Black & Decker, Pricewaterhouse, Pepsi, Nestle. And so in the last 10 to 15 years, a lot of my work has shifted to small to middle-sized privately held companies. They're much easier to deal with, much more fun to work with, and it's very satisfying. And if you put a good person in, they can make a dramatic difference in the business.
And that is true. And, I think a lot of them struggle to find good people. But just like you, I find it a lot more fun to work with them because we can get stuff done, right? We don't sit with committees and politics and all the other stuff. It's like, hey,
lists and everything else.
yeah, let's just get it done. And you kind of go ahead and you do that.
I think financial people in big companies are a little bit easier to deal with because we speak the same language, but most financial people have a limited impact. So what you and I do can be transformational.
That it can be, and it has been.
Yep.
So you came up with 7 questions for people to ask themselves to get a clue of where they're at. Can you share why you did that?
Okay. So when I went after the small to middle-sized companies, I ended up talking to a lot of business owners. And the business owners seemed to be afraid of accounting and finance. They were put off by it. They said the financial statements were very detailed and hard to understand. And underlying this whole thing was a fear of finance and their finance person. I don't know what it is, but they were afraid that if they fired the controller, that all hell would break loose. They would go to the IRS, they'd go to the bank, or whatever. So what I thought is, you and I both want to help companies do better. But before you can do that, you have to make sure that the company needs a better finance person. So I came up with these 7 questions. And the 7 questions have yes or no answers. And they can be answered in 10 minutes or less. A person can answer them on their own, or they can call me up and we'd answer them together. And when we're done, you get a scorecard, and it goes from 0 to 30. But it would tell you if you have a good person, a bad person, if the person's helping your business or not, and if the person's not, what you might want to do.
I like it. So let's do this. Let us roll through these 7 questions one by one, and you can kind of explain them and ask why, and maybe people can take the quiz right now and get a pretty good idea of where they sit.
Absolutely. Great.
So the first question is, your fiscal year ends in 3 months. Your finance person has projected the results for the year. Are you confident you will meet the projections? Now, before we go to this means you have projections for the year. Okay, if you don't have projections, that's a major no-no. Because if you don't know what the target is, how do you know if you hit it? Right? But now you have projections. Now you're asking about confidence in the ability to hit it. Tell us about that.
So, the head finance person, whether it be controller, CFO, whatever, sees the money coming and going. And they deal with the suppliers, they deal with the customers, and they should have as good a sense of as anybody in the organization if you're doing well or poorly. And they should understand what's happening, and they should be able to project that out 3 months. If they can't, the person is a bozo, a dumbbell, and they should be replaced. So, I've talked to people and I'd say, how you doing? He said, I'm terrible. We were projecting a $500,000 profit. We ended up with a $500,000 loss. I mean, the ramifications of that are huge, from cash flow point of view, from bank relations, from working with marketing, whatever.
So I'm just going to share what we do. Usually every year around October or November, the latest December, we set out the projections for the next year. And we do it based on what occurred this year, what tends to occur historically, cyclically throughout the year, what our growth goals are that are reasonable. Because if they have unreasonable growth goals, I'll challenge them. Some of these entrepreneurs have crazy ideas of what's possible. And then based on what the sales goals are, we figure out the cost of sales. And then depending on how much they're growing, we can figure out what the overhead and employees and everything else like that go. And every single month, we measure against that goal. And we keep the original projections because we always want to know where we started, but we also have a revised projection every month of based on what we've done and what we think we're going to do, and we compare that to the original projection and to what's occurring. So the answer to this question is they should, especially if we're in September, we've got September's numbers and we're looking at October, November, December. I would say that for the most part, except where I have a business where like 80% of their stuff comes in November because it's Christmas, we got an extremely high confidence of where we're going to end up.
So, when they work with you, Rocky, they have much more certainty than if they work on their own. I've seen people be hugely disappointed, and but it's not a hard thing to do.
For you and I, and for someone who knows how to do this, it's the same thing. Putting a roof on a house isn't a hard thing to do. But for those who don't know how to do it or want to do it, it's a hard thing to do.
So when I worked with Seagrams, their fiscal year ended July 31st because the holiday season was roughly 50% of their income. And if they missed the holiday season, they wanted to have 6 or 8 months to make up for it. So, I think that there are things you can do that you can adapt to a business and make it a little bit easier to project.
And that is very true. So, question number 2, do you get a cash flow statement with your financial results? And do you get a 90-day cash flow projection?
So, you and I are huge believers in cash forecasting. How a business can operate without a cash forecast, to me, is like walking on a tightrope without a net. And, COVID, caused a lot of companies to fail or be seriously damaged. And even in non-COVID times, there's all kinds of dangers. And the companies run out of money on a regular basis. If you know 90 days or ahead of time, you can find more acceptable alternatives than when you run out. So if a controller comes to the business owner and says, in 2 weeks we're going to run out of cash, they should be fired. And if your controller doesn't give you a cash forecast, you should add that to that person's responsibility and make sure they do it. And usually the initial forecasts are not very good, but hopefully the person learns from the mistakes and figures out how to come up with a better forecast. And it's something you can be proud of.
It is. And depending on my clients, because some of them are small, the ones that have a bit of predictability or that we have the ability to predict, we tend to look out 3, 6, 9 months ahead. And we understand that at the 6-month mark, we say, oh, we don't have a lot of cash flow. We understand that, but we also know that between now and 3 months, we're going to be building the cash flow for those next 90 days. But they're aware, hey, I already have orders today that are going to do this going forward. Okay, where's my shortfall? Where do I have production problems? And how do I use that? So we use the cash flow statement to help also with plans on production.
So I was doing a pro bono consultancy to a high-end photography studio in New York City. And they were growing like crazy, and they had to invest more money in the business each year to fund the growth. So I said to the husband and wife, why is this? And they said, well, our customers pay us in 60 days, and we pay the people who work for us either a salary or we pay them in 30 days. So I said to them, how about if you contact the people who are your suppliers and ask them if you can either increase them to 45 days or 60 days. And they've been growing rapidly and they haven't had to invest nearly as much money in the business. So if you do something and there's a problem, you can try and come up with a remedy or a solution that everybody can live with. And the husband who kept the books and was the business manager called each of their major clients, and they said, we can't tell you how much we appreciate that. The personal touch goes a long way.
And I would ask, can I get paid in 30 days instead of 60? Or can I get paid up front? Or if I gotta wait 60, well, then we're gonna have to charge you a little more because now I'm a bank. And
Okay.
banks get interest on their loans.
So there are multiple combinations of permutations that would solve this. So these people's biggest client was L'Oreal, and I don't think that L'Oreal is very flexible.
No, that's true. But price yourself to sell to that company and know that, hey, I have a carrying cost of money, and maybe you're going to factor it out. What does that cost? Build your prices into that as well. So up front.
With them on that they had approved purchase orders, and the purchase orders had all the elements which they were able to cost out. And I said, you don't want to work on any project so you make less than 50% gross margin. And they went back and they took a look at a couple of projects they worked on that generated 40%, and they changed their pricing.
That works.
So, so to me, this is this is not a stroke of brilliance or a bolt of lightning that comes out of the sky. It's using common sense and experience. And what didn't go as well as it could have or should have, if you learn from what went wrong, you'll do better in the future.
Very true. And so number 3 is, does your company have an annual financial plan? And are the actual results compared to the plan on a regular basis? You said at least quarterly. Quarterly to me, I want it done monthly. And we talked about that with the first question. This is what we do.
So, what I suggest, and the next point is KPIs. So a lot of these senior executives and business owners really don't like formal financial meetings. So if you have good KPIs and you include order backlog, you include gross margin, you can largely in 20 minutes cover what would normally take 2 hours if you went over the full financial statement. But
we don't go over the full financial statement. All we do is tell them where the pluses were, tell them where the minuses were, and figure out how to change it. But we don't spend hours going over it. I do that myself, and then I bring them what they need to know to work on.
Right.
And so if 6 of the KPIs are all thumbs up, I'm like, hey, all these KPIs are thumbs up. This is the one that's the problem. And what I really like is leading KPIs. So even before the sale occurs, what are my pre-sale KPIs so I can tell what's coming? And that's kind of what was question 4. Do you get key operating statistics by the 3rd day of each month? And here's the other thing I think about these KPIs. If you measure the wrong thing, you will get the results you measure, but it may not be to your benefit.
But there's an old IT expression, garbage in, garbage out. So, you really need to know your business, know your customers, and have an understanding of what's going on. So, if you have a capital intensive business with a long lead time, order backlog is great. But gross margin to me is probably one of the best KPIs you can have.
I want to talk about that because I think a lot of people focus on revenue, and I think that's the wrong KPI. The gross margin by far is a much better KPI than your revenue because that is going to tell you how much money you have to run the business of the business on. And that is much more important than just total revenue. Because if you've got garbage percentages for your GP, you're in trouble no matter how much you sell.
So I worked for Seagram's for 11 years. And when I joined Seagram's, they were the largest distiller in the world. And they were very proud of that. And the salespeople were given carte blanche to sell as much as they can, whatever price they had to. And the company was headed for a financial ruin. And the financial people, over a period of time, convinced management that you want to sell as much product as higher cost as you could, higher price as you could. 20 years later, when the Bronfmans sold Seagram's, they sold it for 5 times what it was worth when I joined the company. So revenue, bigger is not necessarily better.
No, it is not. Question 5 is, do you get your financial results in 10 days or less after the monthly books are closed? So you're saying your books should be closed 10 business days after the end of the month.
So there are 22 business days in a typical month. And a lot of privately owned businesses don't get their financial statements until 15 or 20 business days into the month, which means that the bookkeeper, accounting manager, controller is doing something that isn't value added. So they're generating numbers, and your specialty, my specialty, is analyzing the numbers, coming up with opportunities and problems, and solving them. So most big companies, most well-run companies, close their books in 5 days, and some close them in 2 or 3 days. So 10 days, I think, is a generous target that most privately owned companies won't make. But when you go to remediate or improve the performance of your controller, rather than just say, look, I want you to do a better job, you say, I want you to produce a complete set of financial statements by the 10 business months of the business day, and find somebody who can help them do that. And he'll free up time, and they'll be able to collect, shorten the receivables, make your inventory more, turn over more quickly, do all kinds of things that add value.
And that is so true. And question 6 is really about adding value. Have your finance people made any meaningful recommendations in the last year to reduce costs or improve operational efficiency? And I think it's that second part that people ignore. Oh, cut costs, but they don't say, hey, how do we improve operational efficiency?
Absolutely. Big companies do it all the time. I did a lot of work for Stanley, and Stanley had a huge plant in New Britain, Connecticut, and the building was north-south. So on the west side of the business building, they received everything, and they started processing it on the east side. And a fellow came in from GE and said, "Look, we're going to move the receiving from the west side to the east side, and we're going to make it a lot more efficient." Cut the production cost by 10%. But, the financial people see this, and a lot of financial people are snide. They kind of say, these guys are dumb. And they're not dumb, they're just not aware. It's not something they focus on. And the finance people can learn a lot from people who can sell, people who can create. And the people who can sell and create can learn a lot from financial people.
Well, and part of it, though, is a lot of times the people who are doing the work aren't listened to.
Right.
And so they're like, why is this the way it is? If you let me do X, I could cut 30 steps out of it. And they're like, this is the way we've always done it. We know better. Like, no, you don't. You got to listen,
I
right?
think that that people are much more receptive to the idea of process improvement today. Unfortunately, most people in finance who think they have X years of experience, in my opinion, would be more accurately described as having a year of experience X times.
Yes.
And so if somebody has been kind of a robot, it's hard for them to step out of what they've done.
That makes a lot of sense. And I was going to say the same exact thing before you did. And so, question 7, I'm going to expand that a little bit, but does your finance person have a positive working relationship with your CPA firm and your bank? And for that matter, I deal with a lot of smaller business owners. So, do you, as the business owner, have a positive working relationship with your CPA firm and your bank? And do you actually ask them questions about your tax return? And do you consult with them about what to do about it? Are you ever having tax planning going on? And are you talking to your bank? Because, the bankers are out meeting everyone. They can be referral sources and lead gen and they can also tell you what's going on in the economy. So it's great to build these relationships.
These banks have incredible information. So they get financial statements, and the better banks collect financial information by industry segment. And if you want to find out whether your company is better or worse than your competition, you can go to them and you can ask them, what does a competitor of mine have in days sales of inventory? What do they what do they have in days receivable? And you can get all kinds of ideas about what best practices are, what's happening in your industry. And the bankers, they have this information, and very few companies avail themselves of it.
And that's a shame. If you're going to get information for free, you should take advantage of it.
Yeah.
You don't have to pay for everything.
Some of the best things in life are free.
Well, and I tell people at the end of this podcast, you don't need more resources. You need to be more resourceful. This is an example of that. How do we get information or valuable insights of what's going on around us without having to necessarily pay for it?
So, if you work with your bank and you treat your banker professionally, you ask them for advice, you ask them for input, and you have a good working relationship, your business is growing, you need to increase your line of credit, you're more likely to be approved because you work collaboratively rather than in a combative or a confrontational manner.
I sit on a lot of charity boards and I've done a lot of fundraising. And we have a saying in the world of fundraising: if you want money, ask for advice. If you want advice, ask for money. It's that weird thing. But when you ask for money and they give you advice and you take action on their advice, they tend to give you money.
Absolutely. I was the president of the board of a not-for-profit in New Canaan, where I lived for 5 years, called A Better Chance, and recruit high potential minority students to come to prep schools and better public schools. And the 5 years I was on the board, I doubled the funding. And we got funded by the United Way. And somebody said there were all kinds of trusts that were set up by people who were well-to-do, will only contribute to organizations in New Canaan. Almost everyone we went to, we got money from. So we needed new PCs for the kids. Somebody just wrote us a check for $5,000. It was just phenomenal. And not-for-profit's very rewarding.
It is. And here's the secret. When you sit on these committees and boards, you're sitting around with other people who like to give and are successful. And so at the one charity we're part of, the one guy who's big in it is the guy who owns all the luxury car dealerships in town. And every time there's an event, I make fun of him. I'm like, oh, I see all your clients have arrived because all the cars are from one of his dealerships. Smart man, right?
I'll tell you, a lot of these successful people are really nice.
They are.
They don't want to be taken advantage of. They don't want to get a big line. But they're nice people. They've succeeded because people have liked them and they have some good ideas.
And it's true. And when you are involved in these things, your phone calls get answered, right? Because you've got a shared mutual interest, and it's just another way to market and to build relationships and to pick up opportunities.
If you're around the community, one of my best clients was Nestle Waters, and I coached youth baseball. And one of the worst kids on my team was from a family that came from Canada. And I let the kid play. I coached him. He had a good time. And his father eventually became the CFO of Nestle Waters. And I placed 15 people there. So average fee for me is over $30,000. So it was probably worth $500,000 in business.
Nice. And that's what you never know, right?
Absolutely.
And I think that's the important thing is figuring that out and seeing how it works for you.
Right.
Is there anything else we should have talked about but didn't get a chance to?
So I sent you my write-up on 5 examples of companies that benefited from hiring a finance person through me. So if you think that your company could be more profitable, if you want to sell it down the line and you want to sell it for more than people are willing to pay you, one of the quickest ways to do that is to hire a good finance person, either a fractional CFO like you or somebody who would recruit a full-time person for them like me.
And I will tell you this. Um, and I deal with smaller companies. When they do their own books, people don't trust them. But when they have like an outside bookkeeping company or professionals doing their books, the trust level goes through the roof. And so that just having professional people makes you more valuable just in that of itself. It's a weird human nature of how we behave.
So great.
If people would like to learn more about your services and connect with you, how do they do that?
So I have a website. It's bondandcompany.com. And probably an easier way to get information is to go to my LinkedIn profile. And I have this paper. I have a link to my quiz there. And I write, 2 or 3 times a week about business topics that I think are interesting. And so people can look at my posts just like they look at your posts and listen to your podcasts. And it's free advice from a financial point of view.
Awesome. And we'll put links to that in the show notes. Thank you so much for joining us.
Thank you for having me. Have a great day.
Thanks for listening to this unedited video of the Profit Answer Man podcast. If you'd like to catch the full episode and learn more about what we do, check us out at profitcomesfirst.com. We also go through the Profit First book in each and every chapter in the beginning episodes of the podcast, so check those out as well. Thanks for listening, and here's to you having a more profitable and growing business.